That's why people say, oh, stock investing is so risky. It is not if you do what we do to look at the financials. And then before we buy a company, 10, 15, 20 hours. I know some people say, oh, NVIDIA's up, I better buy it. And that's the research. And that's where those investors someday do get burned. When you don't do your homework, when you don't understand what you're buying, you will get burned. You're just gambling is all you're doing. You're just guessing at the company.
And I mean, you look at this non-GAAP versus GAAP situation. The last time this was as prevalent, I'm going to say, as it is now, the tech boom and bust. And people say, oh, it's different this time. And I mean, it just drives me crazy. It's like, it is different this time. You're right. Different companies. There's no pets.com. Yeah, that's not a company anymore. But I'm going to say it's a very similar story. And I think that is cause for concern. I think you, as an investor, should know, again, the difference between your GAAP and non-GAAP earnings for a business, because it could, as you say, burn you down the road. And as we've talked about, we are more conservative investors, but I do believe fundamental investing in the long term is going to produce better results, which is why we stick to it.